Hello and welcome to the latest Sharesify podcast. I'm James Crux and I'm joined by my colleague Stephen Fraser. Hi, Steve.
How you doing? You all right?
Yeah, not too bad. No Ian today. He's wearing out the shoe leather and he's attending the AIC summer event tonight, which I'll also be at. So hopefully he'll bring back some good stories and get some good contacts there. But what's piqued your interest this week, Steve? I see you've done some very interesting stories on Samsung and AI stocks outside of the States. Tell us a bit more.
Yeah, I mean, I think the watchword at the moment for markets in general has been volatility. They seem to be moving one way one day, moving the opposite way the next day. We've still got this Middle East conflict that refuses to go away. It seems like it's calming down. There's some kind of negotiations, and the next thing you know, the hostilities have been flaring up again. So obviously, we just have to be a bit sensible as investors and just ride these moments of volatility out. But there's been massive volatility also in the AI space, and increasingly, I think investors are just becoming a little bit worried about the inflation of valuations. And it's worth bearing in mind that valuations are far more full in the US than they tend to be elsewhere. So yeah, we've written a piece about good global AI stocks that are outside the US and where valuations are certainly a lot cheaper. So definitely worth coming to the website, have a read of that. And Samsung was a great example of one of those lower valued outside the US superstar AI stocks, if you like. But its recent results, well, the figures were absolutely outstanding. The shares were rather disappointing. And I think it was largely down to markets just expecting a bit more. They just wanted a bit more oomph in terms of forward guidance and optimism and so on. And you might argue that perhaps Samsung are playing a good hand at just managing expectations. You don't necessarily want CEOs to be out there being too gung-ho with their expectations. So I think over time we'll see things sort of calm down a bit in the AI space. But it's just been very, very choppy. And I know you've seen some pretty choppiness in spaces you've been looking at as well, James.
Yeah, absolutely. So some interesting moves in consumer. BYIT Group, which is one we've talked about before, delivered its fourth upgrade since last October's IPO. So that one's really going great guns. Yeah, I mean, broad-based growth, expanding margins. I was actually struck by the fact the global market share is less than 1% for this company of this kind of nascent at-home beauty device market. So, that sort of upgrade story could have further to run. One that didn't upgrade, I think, has bit the market a bit disappointed, was the gym group. So still got positive momentum. The gym opening program still on track. Revenue per member was up 5%, so that shows it's got a bit of pricing power, but no upgrade. As you say, management being a little bit cautious given the backdrop, the cost of living squeeze, and they also guided for an increase in net debt, which I think probably spooked investors a bit.
Yeah. I mean, it's interesting. You flagged up Gym Group as something to watch. And
Yeah.
last week's look ahead piece coming next week, and it does seem to be this fairly astonishing growth story, but it's inevitably going to go through these slight peaks and slight troughs where you get weakness in new subscriptions, etc., etc. And I think that the summer being as hot as it's been over the last month or so, that's probably going to be quite conducive to keeping people in parks and open spaces and away from gyms. So maybe they'll be a bit more predictable, when the weather starts closing in us in a few months' time.
Yeah, that's right. Within weather normalises. Lots going on with investment trusts as well, Steve. So we've got boards, continuing to take action to bring in these wide discounts.
Yeah.
One of them is Brown Advisory US Smallers, which has launched a strategic review. That could include a cash exit, and a much bigger trust, which is RIT Capital. Now, this is a big global multi-asset fund. Launched a 300 million tender at a 15% discount. So I think that's kind of an acknowledgement that buybacks haven't really shifted the dial, still on a 25% discount. And one other final one I thought I'd flag was International Bytes Technology Trust. The managers there have got a real knack of spotting takeover targets, and they've wrapped up their eighth one of 2026 to date. It's just astonishing. So that M&A boom in biotech shows no signs of let up.
Well, just to give people a brief sort of 20-second insight into IBT, because it has been just an astonishing performer over years and years and years.
Yeah, I mean, the two managers got sort of a grounding in science. They sort of know, got commercial hats on as well. So they've got a really good blend. And they just have this knack of, picking companies that will be attractive to big pharma who have this kind of patent cliff issue to solve. So, it's a really interesting trust. And it's unusual in that it pays a dividend as well, 4% of NAV every year. So it's also got a nice little income angle, which is unusual for that sector.
Yeah, absolutely. Talking and staying with the investment trust space for a moment as well, we've got a podcast coming up on the 23rd of this month with Guy Anderson. Now, Guy Anderson, someone you've met a few times, haven't you?
Yeah, this is mercantile, so it's identifying tomorrow's winners today, small and mid cap sort of bias, very much into growth, and it's also a dividend hero. So that'll be a really interesting chat with Guy. Really looking forward to that one. So listeners, make sure you dial in when that one goes live.
Yeah, I mean, that is a really fascinating objective because it's got on the one hand, it's tomorrow's winners, but on the other hand, it wants to pay regular and quite attractive dividends as well. Balancing those two things, it'd be interesting to get his view about how he manages to do that because you normally expect you to be in one camp or the other camp. Either you're going to have a very stable cash generative income paying type stocks, or you're up with super growth kind of companies. So it'd be really fascinating to find out exactly how he balances those two types of objective.
Yeah, yeah, definitely. And managers see a lot of value in that FTSE 250 space, which is going through a rare sort of patch of underperformance against the FTSE 100. So we'll get Guy's thoughts on that.
I suppose
Looking
the M&A
forward to
is
it.
starting to dry up a little bit, yeah, only in relative terms, because the last 5 years has just been absolutely astonishing. So many FTSE 250 companies have been taken out by either bigger peers or by private equity. And it's just, in many ways, I think I always feel a bit conflicted. I think on the one hand, some of these high quality businesses getting taken out at a 30, maybe a 40% premium, you think, well, okay, one in the hand's worth two in the bush, all that jazz. But ultimately, you want these companies to be given the chance to grow over time so you can compound your own returns. So it's a bit disappointing to see high quality businesses taken out for prices that ultimately could be seen as quite cheap.
Yeah, exactly. That's been in the ranks of the London Stock Exchange as well as a real shame. So, but next week we've got a couple of more FTSE 250 names reporting. I think we've got Pets at Home, Dunelm, others in the retail patch, Watches of Switzerland,
Right.
Sosandar, Ocado. So it's going to be a real busy week.
I think
And
we're
we've also,
starting to see a real acceleration now, aren't we, of earnings, and we'll be moving
yeah,
into the second quarter of US earnings, maybe the third week of July as well. So it's going to get certainly a lot busier than it has been over the last couple of weeks. So
yeah, definitely. I think we've got the banks reporting next week, haven't we? And back over here, we've got recruiters as well, which is always a good bellwether into the jobs market, what AI is doing. I think we've got
sure.
Hayes, Robert Walters, and Page. So Ian will be all over those, no doubt.
No doubt at all. And staying with this week briefly, I think it's tomorrow night. I think Pepsi are reporting, and there's also Delta Airlines later this week as well. So something to keep people quite interested. And tomorrow night as well. So tomorrow daytime on this side of the pond, we've got Bytes Technology, which is again a company we flagged in our coming next week piece. And this is a bit like Computer Center, if you know Computer Center listeners. One of these IT resellers. It's a FTSE 250 company. It's got a lot of scale. They're seeing a lot of demand because of AI and how you implement AI tools into corporate workflows and gain either efficiencies or cost savings, etc. So that's giving that kind of IT reseller market a real demand push. So it'd be very interesting to see how they see the next 6 months and beyond going from there. I suppose that's about it from us, James, isn't it? Keep it nice and tight. Thank
Yep.
you very much, listeners, for tuning in. Remember to look out for that podcast on the 23rd of July with Guy Anderson, and keep up to date with us. We'll join you again on Friday. So till then, have a good week. Take care.
Real. Take it.